What's up, guys? Welcome to the weekly technicals live session for February 17th, 2019. And we're looking at the economic calendar right now for this upcoming week. And Monday is a bank holiday. It is President's Day. So not too sure whether or not the markets will be too volatile, at least for dollar index on Monday. But generally we look to trade Tuesday, Wednesday, Thursday anyways. So for Tuesday, we have British pound average earning index for 1:30 a.m. Pacific Standard, so a little bit of a late London session volatility. We'll probably see that for British pound. As well as euro, we have a medium impact at 2 a.m. So again, pretty late London session for that, but going into New York session, we could see some carryover for that volatility. And we'll look to potentially get like a intraday or a scalp trade here because we do have FOMC on Wednesday. So in terms of trading for the week, I do want to keep it light before we go into FOMC on Wednesday. So the only trades, if I do take any, will probably be somewhere between the range of Monday New York session through Tuesday New York session. After that, I will pretty much remain flat or close out any positions, move stop loss to break even depending on if I'm in a trade or not. And Thursday we have a ton of euro news. So, and we actually have dollar index as well, core durable goods, high impact, and 2 medium impact for New York session. So Thursday will honestly it'll probably be the better day of the week. So if there isn't anything between Monday and Tuesday, we'll look to definitely find something, whether that be in euro or British pound for Thursday, but more than likely euro. I still want to kind of stay away from British pound right now. And for Friday, we have a bunch of speakers. Really just a bunch of speakers, so probably see some volatility as well on Friday. So really, from Wednesday at FOMC to the remainder of the week, the market should be pretty volatile. So it's probably best if we don't take anything until after FOMC. It's really going to be dependent on what kind of forms between Monday and Tuesday. But primarily Thursday and Friday do look like pretty decent days for intraday to day trades, as well as scalps. So let's jump over to the charts now. We're looking at dollar index, and this is a weekly time frame. And you guys can see that we still have these equal highs resting up here at that 97.70 level. So, longer term, I do want to see price get above that level specifically. I don't know if that's going to be, by the end of this week or when that'll be. But if we remain above the 95.20 low right here, then we should definitely see, the market come or start trading higher to 97.70. Now we could have a retracement somewhere, in between the really 96 big figure to 96.50 range, and anywhere within there, the market could find support, based on lower time frame support as well. But longer term, I would say dollar index is more than likely reaching for this 97.70 level. Now, if they get below 95.20 down here, then that's going to change. Then they're more than likely going to be reaching for the lows down here at 93.80, with a potential continuation down to 93.20 here. So that's what, the higher time frame weekly perspective is, and we always want to do that at least once a week to get yourself in sync with the higher time frame bias. So if we're bullish this market, we should be focused on buy setups. There should be no reason that we're focused on sell setups because we're bullish this market. Now, we don't trade dollar index specifically, but this would mean weakness for foreign currency in a very general sense. So I would like to see them expand above that 97.70 level, potentially into that 98 big figure level. If you're looking in here though, I'm not really too pleased with Thursday and Friday's price action because we really, in my opinion, we shouldn't have rejected. We should have just continued expanding for the upside at 97.70, but the way that they keep working within this level makes me think that they're either going to want to drop it lower, at least, maybe back into, like I said, that 96.50 to 96 big figure level, which would really take us down into here up to here. So if we actually take our fib, you guys can see that the maximum retracement on a daily basis that we would want to see would be that 95.63 level, right, the 79%. But anywheres from 96 big figure up to 96.50 really would be a logical area for the market to find support at. So what does that mean? That means that we could definitely trade below Tuesday and Wednesday's low in here, right? So this is Friday, Thursday, Wednesday. Yeah, Tuesday and Wednesday's low. And if we do trade lower, then I would definitely be looking for support anywheres, kind of within this area. 96 big figure to 96.50 would be optimal on, like maybe a spike through or a wick. We could trade back down, into these levels. I wouldn't really expect that. Primarily, I would just like to see them stay above 96 big figure. It is that big figure level. So what I would be focused on for dollar index, ideally, let me delete this, and we're going to go ahead and clean up our charts here together while you guys are with me. So we're going to delete this and this. And you guys should always, consistently have your charts marked up. You don't have to copy mine. Mark up your own. Maybe you could have a copy of mine and a copy of yours, so you could kind of see what I'm looking for as well as what you should be looking for. But for this specifically, I didn't need that line anymore because we had already poked above the 97 big figure, cleared out the liquidity. Now this here I'm going to keep on my chart, which is this high. So you've seen that we broke through here, retested, and then we expanded higher. Sorry, I had to drink something. But on this retest here, this provided a good opportunity to buy dollar index, right, or also short foreign currency. I'm going to keep this level on my chart because, in my opinion, it could really come back down and retest this level again, which I wouldn't expect it just to retest it without going below these lows. And if you drop down to this is a 4-hour time frame. Wait, hold on, what is it? Hourly? Yeah. So if you look on an hourly chart, we could definitely trade back down into 96 big figure because we have these equal lows right here at 96.40. And then we also have equal lows right here. So what I'll actually do, this is the black line that we had on the daily. I'm going to move it down and adjust it to the lows here. This low comes in at 96.64. This one comes in at 96.63. So 96.64, perfect. And you can really see that this one actually is more like a triple bottom. So we got a low here, another low here. So basically there's going to be a lot of liquidity resting below there. and we already know that our daily level is right around this area as well, which was the high of this candle. So we can actually mark out the close, 96.57. I'm just going to adjust this. Alright, 96.57. Go back to an hourly. Perfect. Now I'm going to delete this. Alright, so 96.57 is the open of that candle that broke above structure, so I can go back out. This candle here. So once the market got above it, it's now broken market structure. Retested it, expanded. We haven't traded down to the open. To the close yet. We closed above it here. Closed above it, never traded back down to it. But now if you look on the hourly, this is the same level, 96.57. We have all this liquidity built up in here. So I think the market will probably want to expand lower, at least down into the daily level. So we could do that before FOMC. So Monday, Tuesday, we could trade down into, really the 96.60 to 96.50, or preferably even 96.40. We could come all the way down here. And if we can do that, we could start to see this market start turning around and going for that 97.70 level, which is those daily equal highs. And that could take place between Wednesday through the remaining portion of the week, so they can use FOMC and all those news events that they have on Thursday and Friday to basically expand this thing higher. While early on in the week, they drop it lower and trap all the retail traders thinking this thing's going to go lower. So what that would look like would basically be, we could really come down to the 96.57 level, or we can trade lower here. And then you want to see the market start getting back above these levels, forming bullish price action. And continuing to expand higher. Right? So that's ideally what we would like to see. Now, if we don't come all the way down to 96.40, like I said, we can come down to this level here, and you'd be looking for the same thing. Okay? So that's what I'm going to be looking for dollar index. I want to see initially if we're going to be able to trade lower and clear up some of that liquidity. Again, the reason that we would look for that is to basically trap retail traders at the beginning of the week or ahead of FOMC, for example, thinking that this market's going to go lower. Then, obviously they would take it higher. But something that you guys need to always remember is focusing on the daily market structure, right? So the market structure overall is bullish for this pair. So we're not going to be looking for sell setups in particular, but there is an idea that potentially this market could trade lower first, and then we could see kind of like a reversal on a intra-week basis and have the market start trading higher, because the majority of the liquidity is resting above the market. These lows on an hourly basis aren't as significant as the highs on a daily basis. But if the market trades lower and takes out the liquidity here and here, at that point, all of the retail world is going to be shorting this market because it's making new lower lows, and they just think this thing is going to be falling off the face of the earth, right? But in all reality, the liquidity is resting above the market at 97.70, right? So that's far more important than any lows below the market. Okay, but you have to also look for ideas as to what the market would potentially do going ahead of, such as like a high impact news event like FOMC. Now we don't have to trade lower. We can essentially, we've already traded into support. We can start trading higher from here. And if we get back above 97.40 and we close above that level, obviously look for a retest and expect the market to continue expanding higher. Right? But being that we're down here, it just would make sense to trap retail if they did take it lower first. Not just from an hourly perspective, but also, like I said, from a daily perspective. We haven't retested this daily level, and not that it has to, but it would be more beneficial to do that than go higher, because they're not going to want to let the people who are already in the market from this big run up, who have more than likely trailed their stop losses down below these lows, right? Because what does retail think? Retail thinks triple bottoms are support. So while they're buying the market, their stop losses are probably resting below here. So you would expect the market to expand to a key daily level, which is here, 96.57, right? So we need to see what the price action looks like around this level, but I do like this idea for dollar index in particular. Alright, so we're going to move on to euro dollar, and the analysis for the other pairs are not going to be as long as this, but I did want to touch on that because that really gives us an idea of what to expect for the other pairs, such as foreign currency, which are the majors, the ones that we trade. Now for this, we've already traded below the liquidity that we've had resting here, so overall that was a nice expansion to that, but I do want to see them trade below this 1.1220 level. So I'm really looking for that in terms of a kind of like near-term perspective. Like, I don't think it's going to take months or anything to get down here, but relatively near-term, preferably by the end of the week, I'd like to see this market get below 1220 and potentially 1.12 big figure. So same levels that we've been looking for. Now I am going to clean this chart up a bit, so we're not going to need this anymore because we've already taken out the liquidity below these levels. Alright. So we know that there's liquidity resting above the market up here. There's also liquidity resting above the market here now, so we need to adjust this. And there's liquidity resting above the market. I know that because there's a new swing high. Right, so anytime there's a swing high or swing low, there's liquidity resting below that. So the market had a run up here. Market came down, came down, came down, failed to go lower than here. So there's still liquidity resting below here. There's also liquidity resting below here, 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 here. All these different lows, there's liquidity resting below. As the market starts trading lower, you see it seeking that liquidity. It's taking all the orders from below the market now. And notice how it gets close to this level and it keeps pausing and going back, pausing and going back. Now there's also liquidity resting above here. So think about what we talked about for dollar index. We could see this market trade higher while dollar index is selling off, right? This would take us above the daily liquidity here, the most recent daily liquidity, and we could do a stop run, just meaning the market would run above it and go lower. And once, we're not going to look to sell it here, but once we get the bearish price action on the lower time frame, 15-minute or 5-minute, I'll be looking to sell it somewhere within this level, 1340, potentially 1330, 1340, ideally between those two levels. So if we trade higher, that's the scenario I would be looking for. I'm not looking for a reversal and thinking that this market's bullish, because I'm bearish this market, meaning I'm only looking for sell setups. So I'm not looking to buy it up into this level. I'm looking to sell it once it started to top out. Right? So meaning once it's taken out any form of liquidity and showed me weakness and that the market wants to expand lower, at that point I'll sell it and I'll look for lower prices. But I'm not going to look to counter trend trade or anything like that, buy it up to this level. Now, if that is something that you guys do and that's your trading model, then by all means, go for it. If we do get, that continued run to the upside, I would be making sure to clear out some profit at the 1.1340 level, which would be about a 50 pip run for you if that is something that you do in your trading model. Yeah, that's basically for those of you that counter trend trade. But for me, I'm not really a counter trend trader. And sorry about that, guys. My computer screen went black for a second, so I had to log back in. That's why I went quiet for a second. But yeah, that's it really for Eurodollar. We can drop down to an hourly really quickly, see if there's anything specific. Oh yeah, there is this. We've got relative equal highs here, which is that 1.1340 level again. So you can see daily liquidity resting here, 60-minute. They're not necessarily equal highs, but they're pretty close. Regardless, there is, daily liquidity resting above here. So for those of you who are counter trend traders and you look at this market, obviously you can see we had a nice surge in price here. So at any point here, once you see the bullish price action on the lower time frame, 5-minute or 15-minute, and I say that because you drop down to a 5-minute and you have a shit ton more candles to work with, so you can start to see bullish price action anywheres. Right here, for example, low, high, low, high, low. So get on board, something like that. But on an hourly basis, you can see that we've pretty much broken market structure essentially. So I would expect them to, on a minimum basis, expand up to the 1340 level, and once they get above there, I want to see them show me some sort of rejection, form bearish price action. I want to get short on the lower high, and I'll look to sell it down into my levels, right? So obviously we'll scale off some profit here at 1230. Then we'll scale off some more profit at 1220, more profit again at 12 big figure, then 1.1180 if we can get it. But yeah, basically that's how I'm going to look to short this. So I'm not looking to buy it, like I said, on the way up. For those of you who counter trend, go for it. But not something that I'm really interested in doing. I'd rather be a seller and capture that expansion to the downside, because I think it will be quick when they start expanding to the downside. We just need to essentially, start doing that. So they probably just need to clear out some more daily liquidity if they do trade higher. If they start just selling off, right out the gate, I'm going to be a little bit more cautious to that, because then they could reverse and take it up for the buy side liquidity. But preferably, that is what I'm going to be looking for on Eurodollar. All right, now British pound. This one here, I'm not going to lie, I'm still very unclear. And if you're in the premium group, you guys know from the daily technicals this week that pretty much every day I was mentioning that, I don't really have an idea for British pound. I don't really know what they're doing in here, and I'm mainly just keeping my focus on Eurodollar right now. So this has come down, and essentially we've made a new swing low now. So I'm interested to see if we do start expanding to the upside. I don't necessarily think we're going to break out of this consolidation, though. I think there's just a lot of uncertainty with British pound, so they're probably going to just keep moving this thing, back in and out of the range. So I'm not really looking to participate in it until we get some sort of expansion above, like, these daily highs in here, or even the daily lows. Like I'm cool with either way. but I really need to see, have some conviction behind this. And as of right now, where we're at, I really don't have much conviction. There's a lot of unclear price action to me. I don't like all these big wicks in here. Even if you ignore them, it's a relatively bullish market. So I just can't get away from the fact that I think they're going to trade higher, but it's really showing no signs of that yet. So I don't really have much to say about it. Honestly, the main thing I would kind of urge you guys is to stay away from it right now and mainly just observe, see whether or not they can start trading higher for these, upside levels of 1.32, 1.33. If we get above that, and we show, strong bullish candles closing above there, we can then position for a longer term move higher and, get in on a position swing trade or something like that. But I'm not looking to really do anything at all until we get above those levels, because we're you guys can see it. I mean, we're just working this consolidation, and I don't have anything that I want to participate in, in the consolidation. I want to see the market get above daily highs and start expanding higher, because then we're going to be able to be after those 50, 100 pip, 150, 200 pip moves in a week, versus 20, 30 pips here and there for like intraday and scalps, right? Which is preferably my model, but I do like to participate in those big bullish days. So like when we see nice expansion like this on the upside, nice expansion, I want to see, you trade during those days, you're able to capture, there's multiple opportunities, for example. So like this one here was, that's really nothing, it's just 100 pips. But for the most part, you'll see that happen during the fall, but a bit during the spring, I would say it's nice, but we haven't really shown too much so far for the year. But it's still early on, so I would be generally staying away from British pound and keeping my focus on euro dollar. If you come down to an hourly chart on this chart, on this pair, British pound, you can see that we have broken up here, and really I would consider this a break of market structure on British pound as well. So I'm interested to see, if they start seeking the liquidity above here, 29.60, more than likely they'll make a run up to 1.30 big figure, and from there, we could definitely start expanding higher. So I may participate in something intraday if we get, back above this 29.60 level, but as of right now, there's nothing that I want to participate in yet, but this expansion to the upside here definitely was nice that we've seen on Friday. Let's see, so let's move into Euro GBP and then we'll wrap this up. Alright, so looking at Euro GBP, we know that we have these equal lows still resting below the market. So we're bearish Euro dollar, we're bullish all higher time frame, we're bearish Euro dollar, we're bullish dollar index. And with that being said, this market looks like it does want to start expanding to the downside. Maybe not right now, but longer term we want to see it, as long as we're below the 88.58 level, we want to see it start expanding for 86.20. And if that's the case, that means weaker euro, stronger British pound, so we could definitely see that push up for British pound, or potentially a consolidation if this thing is expanding lower. But I don't necessarily see higher prices or anything like that on Euro GBP right now. That will change obviously if we get above 88.50, but as of right now I want to see this market expand lower, causing weakness for euro, potential strength on British pound, and dollar index. You guys already know that we're looking for higher prices on that. So that is it for today's weekly technicals, guys. Hope you got some value from this. If you have any questions, just drop a comment below, and I check it pretty much every day so I can see if you guys had any questions, and I'll answer them for you in there. But that is it for today, and I will talk to you next time. So have a good one, and have a good week, and good luck with your trades. Take it easy.